Today I'm providing you with a housing market update for the Mid-Atlantic region. Now, depending on where you get your description of the Mid-Atlantic states, there may be some variations to which states might make up the Mid-Atlantic region. The Mid-Atlantic region, for the purpose of this update, includes Delaware, Maryland, Virginia, West Virginia, and the District of Columbia. Now, if you're new to the channel, I'm Todd Sachs. I'm a real estate broker and housing market commentator. I keep my viewers informed on the real estate market. If that interests you, please consider subscribing to my channel. Now, before we dive into the Mid-Atlantic housing report, I want you to understand that the housing market is definitely turning into a buyer's market in much of the country. For sure, there are neighborhood pockets with higher demand, but overall, prices are coming down and the lower price sales are adjusting the neighborhood comps, indicating a downward price trend. On July 24th, Fortune.com, which I subscribe to, published an article stating Oxford Economics says that the crumbling housing market will continue deteriorating because of two key factors. The article says that if you thought the housing market was bad enough, buckle up. It says that mortgage rates are still nearly 7% and home prices are 55% higher than they were at the beginning of 2020. According to the Case-Shiller U.S. National Home Price Index. Now, you can see right here on this Federal Reserve chart exactly what they're talking about. The article states that the supply of existing homes for sale is approaching pre-pandemic levels as a combination of high prices, elevated mortgage rates, and concerns over the labor market keep buyers sidelined. And this is coming from Oxford economics analyst Matthew Martin, who wrote in a note titled Recession Monitor, and that the real test for the economy is just beginning. The new home market is also being challenged, with builders continuing to offer incentives, including price cuts, in an effort to move unsold inventory. Oxford economic researchers also noted sellers will have less ability to pass along price increases. In other words, sellers will keep pulling their homes off of the market if they can't get a sale price that they think they deserve. Many sellers now need to spend big money on repairs, maintenance, and replacements of end-of-life appliances to make their home attractive to today's savvy home buyers. The less updated homes are sitting on the market longer, and many of these sellers have dropped their prices at least once with still no traction. And what I'm finding is that if sellers don't make the effort to entice buyers with a price-right, move-in ready home buyers are taking a pass. Buyers are waking up to the realization that an outdated home needing updating and repairs will make them house poor, with today's prices reflecting an overall higher cost of living. And if you're a seller and your house needs a lot of work and you don't want to drop the price to reflect that, you're just not going to attract a buyer that's willing to take on the burdens of your renovations. Most people want move-in ready homes. Look, I've had buyers that I have toured homes with that have said that they don't want a specific home because of flower wallpaper or some funky color of paint. Believe me, most people don't want to do anything. They want to move in and unpack boxes. However, I do know sellers that you're still expecting that you cannot fix things and pass your house along to a buyer that will pay top dollar, but it's no longer 2022. I have been warning everyone that period of time from 2020 to 22 was just not sustainable and that a housing market downturn was imminent. And many of you think, well, it's just because of higher mortgage rates and that dropping mortgage rates will save the day. I don't think so. Dropping interest rates will only cause more sellers to finally hit the market, increasing seller competition, providing more choices and better options for buyers. Lowering interest rates, mortgage interest rates, hasn't really proved to work with the home builders. They have been offering 5.5% or 5% mortgages locked in for 30 years for several years now. Their numbers are still reflecting a declining market, and they're reducing prices and increasing incentives. The other thing here is, despite housing inventory rising to pre-2020 levels right now across much of the U.S., the supply is still considered very low, and the lack of supply isn't keeping home prices elevated anymore. Prices are dropping. All of this is no surprise to me, as I think many home buyers and even real estate investors acted completely out of exuberance over the last 5 years, pumping up home prices, creating the biggest housing bubble of all time. Today's housing bubble dwarfs 2008. It kind of makes it look like a wart on a frog's back sitting next to the basic Mount Kilimanjaro. And how about you first-time home buyers that have recently purchased homes? Many of these first-time home buyers are now suffering the consequences of their FOMO because their exuberance helped fuel the bidding wars, which increased the home prices to where they are today. And now, because of that, we're seeing jacked up property taxes, homeowners insurance, home repair costs, and home maintenance expenses like we've never seen before. Many of these new homeowners are house poor. Do you know what that is? It means that other than housing-related expenses, they can't afford much of anything else unless it goes on their high-interest credit card. Not to mention that U.S. consumers are now not paying off those high-interest credit cards every month, and the consumer debt is at an all-time high. Don't believe me? Let's take a look at this Federal Reserve chart. You can see here that consumer debt, credit card debt, is almost at $1.1 trillion. So with all things considered, home price declines and higher home inventories nationwide are indicating a major shift in the housing market. And I believe this is only the tip of the iceberg. And if you're a home buyer waiting on the sidelines, pay very close attention and get prepared. This may be an opportunity you've been waiting for. But I can't tell you how long I think this downturn would last. It could be 6 months, could be 18 months, could be 2 years. And the reason why we don't know how much of a housing correction we'll get is because the Fed typically shows up to the party late. However, they ultimately think up something to kick that can down the road before things fall apart too much. Now, back in 2008, we were actually headed into a much-needed housing market correction, and the Fed thought it would be a great idea to start buying mortgage-backed securities in 2009. This artificially suppressed mortgage rates to save home prices from further declines. It worked. Home prices started rising again. Instead of continuing to correct like I believe home prices should have, this artificial suppression, the buying of mortgage-backed securities by the Federal Reserve, I believe ultimately led to the housing bubble that we have today. Now, let's take a look at the Mid-Atlantic region to see what is happening to the housing market there. Hey guys, I hope you're enjoying the show so far. I just wanted to take a brief minute and share some exciting news. I have just released my new Todd Simple home buying course. This course is designed for anyone wanting to know how to buy a home. It's 14 lessons, includes worksheets and resource guides. It's designed to take you through the entire home buying process from start to finish. You'll learn how to represent yourself should you want to avoid paying real estate commissions, the best ways to shop for a home, how to avoid costly mistakes, what to look for when touring a home, negotiation tactics, and so much more. If you've followed me here on YouTube, you know that I am very transparent in my videos. In this home buying course, I hold nothing back. In fact, I would go to say that no one has uncovered the home buying process like I have. I'd even recommend this course to most real estate agents, as they will probably learn more about the home buying process than any other training that they've received. I've even made a way for you to gift this course to your family and friends. Visit sacsrealty.education. The link is also pinned in the comments below. And for a limited time, I'm offering a 10% discount on Todd's Simple Home Buying course. Just enter the coupon code Todd when checking out. Now back to the show. Let's start with Delaware. And DelawareOnline.com published an article this spring stating that sales prices of single-family homes across Delaware decreased by 3.2%. It says that across the state, the median sales price of condominiums and townhomes dropped 14.3%. All right, let's check out what Zillow's housing report says about the Delaware housing market. And by the way, I just want you to know that this is as of June 30th, and I've explained this before in my videos, but if you're new, the reason why we're looking at backward-looking data is because if you buy a house today we don't find out what you pay for it until it closes, and that sometimes takes 30 to 60 days. So this report says that the Delaware housing market, at a glance, looking at it, has increased year over year about 1.9%. And we're talking about the average home values. And an average means we take all the homes that are being calculated, we divide it by the number of homes. That gives us the price. You can compare that year over year, see if it goes up, see if it goes down. It's not really an accurate picture of what's taking place. So we'll look at the data further. So looking at this max chart here that dates back to 2017, you can see how the home prices in Delaware have skyrocketed. What we really want to pay attention to is this number right here, okay? Because 56.4% of sales sold under list price. And if we zoom in to the 1-year view, you can, select this. I've dropped all of the links that I'm referencing in this show, as always, in the show notes below. But you can see that in the 5-year view, we've really had this flattening out, over since February, the beginning of this year. We haven't seen a whole lot of price gains. If we do look at the last year, we do see that there is still a trending upward in home prices in Delaware. Now, I put together, because of the Mid-Atlantic region being within my MLS, Bright MLS, that I'm a subscriber to as a real estate broker, I am able to kind of get a little bit more granular for you on what's happening in the market. So we'll start by looking at this map. Delaware is basically broken down, these colors, into 3 different counties. And of course, people move to Delaware from Maryland, a lot of them, because of cheaper cost of living. There's no sales tax in Delaware when you buy something. And you can see that, it borders, it's really close, bordering New Jersey, Pennsylvania, and Maryland. But let's check out this chart. And what I've done here, because a lot of people say to me, Todd, when we're looking at the data from a Zillow report, it's kind of hard to understand what's happening in various price ranges. So this chart that I put together takes us from 2022, which I believe was the peak of this current housing bubble. I said that in a video in the spring of 2022. I said, we've hit the peak. Yeah, we've seen some slight increases, but comparing houses side by side and considering that buyers are now able to get home inspections, we're not seeing quite the bidding wars or the appraisal gap contingencies we saw prior to 2022, from like 2020 to 22. So that really, in my opinion, was the peak of this housing correction, crash, downturn, whatever you want to call it. But I wanted to show you the different price categories. So let's just kind of look at this, and then you'll know how to read the next charts as we get to the other areas of the region. So basically, if you zoomed in on this, you would see that we're seeing some of the biggest price drops in this 900 to $1 million price category. But you can clearly see that since 22, it's been pretty flat for the most part, the list prices of homes for the last 4 years now. And this is from January through July, which is covering the spring market, which is the best time historically for sellers to make the most amount of money. So I believe that in Delaware, as we start looking, in August and September, that we will see these lines starting to come down in the 2025 column. All right, now let's talk about the state of Maryland, where I am. We're also starting to see price declines in most of the markets. We still have a couple pockets like Columbia, Ellicott City, that are selling pretty fast at a lot of times over list price, but in much of the state, that's simply not the case. On this OCTodayDispatch.com article, we have an interesting quote from the Maryland Realtors Association. It says, state data shows housing market slowdown, and that Maryland, along with other markets across the country, is seeing an increase in a number of price reductions. If this continues, it could indicate a shift towards a buyer's market. Really? Says Cheryl Abrams Davis, the 2025 president of Maryland Realtors. Now, I never thought that the associations would finally come to this conclusion. All right, let's turn to Zillow. So again, At a glance, looks like a positive year-over-year increase. Maryland housing market says that the average Maryland home value is 435,202, reflecting a 1.6 year-over-year increase. But let's dive in deeper, because if we look at the 1 year, we're starting to see a big trend down. February, we hit the spring market here in April, and then all of a sudden you're starting to see a big decline. The important things, again, we want to focus on is that about a third, more than a third, 32.5% of the homes that were sold were under what the sellers were asking for. Now we'll pull up what I pulled off of our MLS. We'll first look at this chart of Maryland, this map of Maryland. You can see that we touch Pennsylvania, West Virginia, Delaware, and New Jersey. The nice thing about Maryland is, and it doesn't show it in the topography here or like a real aerial view, but we go from the water, the beach, all the way to the mountains. And in fact, you can drive from the beach to the mountains in one day. But from Bright MLS, showing you the data here, we are starting to see where the columns for 2025 are actually, then this is list price. The houses are being listed for less year over year than what we've seen in 2022 to 2024. List price seems to be coming down. The sellers are becoming more realistic. Agents hopefully are educating their sellers in the market condition, and keeping in mind that a third of these sales, more than a third, the sellers are actually not getting what they've asked for. Now let's look at the District of Columbia, and this is considered the land of milk and honey, where the money floweth from. And DC actually straddles Maryland and Virginia. And a recent article on wolfstreet.com says that DC is one of the 10 big cities with the biggest price declines of single-family homes from peak through May. It says that DC is number 5 with 10.8% decline. And if we scroll further down on the article, you can clearly see, when I was talking about the little wart on a frog's back, you could see from housing bubble 1 with the peak in 2006 to what they call housing bubble number 2. It will be very interesting to see how this plays out. And checking out this Zillow report, it agrees with the article that I just showed you. It says that year over year, Washington, D.C. home values have dropped, according to them, only 3.8%. But let's dive in further. We'll start with the max view here. You can really see, home values appear to be tanking in Washington, D.C. And then if we change it to the 1 year view, oh my gosh, man, this looks like a ski slope to me. This is, if you're watching this and you own property in D.C. that you're thinking about selling, gosh, according to this chart, you better get it on the market. And also, this is a big number, 53.8% of the homes that were sold, the sellers took less than list price. Now, let's check out Washington, D.C. Like I said, it straddles between Maryland and Virginia. And according to Bright MLS, breaking this down into price categories, you can see where a lot of these lower priced homes still kind of show a higher list price year over year, but until you really get to this 700,000 to 800,000 range, then you see a big drop. Bumps up a little bit in the 800,000 to 900,000 range. It declines again, 900 to a million, and then we're really seeing a million plus prices are dropping. Now, again, these are list prices where sellers have listed over the last 4 years according to price range. But remember, over 50% of the sellers are taking less than list price. And I think that's what's really resetting the home values and why we're seeing major decline in DC. All right, let's move along to Virginia. And I want to take a minute and focus on Northern Virginia. And the reason is because I think what we're seeing in DC is starting to spill over to the neighboring areas, and a lot of government workers reside in Northern Virginia. And by the way, Northern Virginia is a beautiful place. This article on northernvirginiamag.com says that high home inventory and lowering prices in Nova, which is Northern Virginia, indicate a buyer's market. Northern Virginia's real estate market continued to see elevating inventory in June, the Northern Virginia Association of Realtors reported, and this month, home prices are now trending downwards. Homes are also spending more time on the market with an average of 20 days. That's a 42.9% increase year over year. But another recent study indicated that agents in the area believe that federal layoffs have begun to impact the DC area housing market. Bright MLS found in June that more than a third of DC's area agents or brokers reported that federal workforce layoffs were causing home prices to decline in their markets. Now, Zillow still, and we're looking at the whole state now, still reports that year over year home values have increased 2.1%. But if we look at the chart here, especially if we change it to the 1 year view, we can see that from the beginning of the year, home values are on a downward trajectory. Also, it's important to note that, again, over a third of the homes sold were under list price. And looking at the map that I've provided, you can see that Virginia is between many states: West Virginia, Kentucky, Tennessee, North Carolina, of course, Maryland. It's a big state. It's spread out a lot of counties. But looking at this bright MLS data of list prices over the last 4 years, definitely consistent with the other slides, a major flattening out, and list prices are, in fact, dropping in just about every price category. Now, let's move on to West Virginia. West Virginia is very interesting to me. We'll start by looking at this housingwire.com article. And by the way, this is an industry publication that I subscribe to. But this article says, which state has the highest share of all cash buyers? It may surprise you. West Virginia had the highest share of cash home purchases at 41.4%. Followed by New York, 40.4%, and Delaware, 38.9%. Now, 41.4% of the homes sold in West Virginia are cash buyers. Well, I found this article on newsbreak.com that says 15 West Virginia towns where investor activity is pricing out locals June of 2025. Well, that makes sense. Cash buyers, investors. The article goes on to say that in many West Virginia towns, home prices aren't rising because of demand from local buyers. They're being driven up by investors. According to a Zillow Home Value Index, these 15 towns are seeing price spikes that far outpace historical trends, with some markets surging over 900% compared to the past growth rates. As investors snap up properties, working families are finding themselves priced out of their own communities. Sounds familiar in a lot of areas. What were once stable, affordable towns are now hotspots for outside buyers, changing the local landscapes in ways that are hard to ignore. Now, again, these articles are down below in the show notes if you want to dive into the 15 cities they're talking about here. But Zillow says that West Virginia overall, big state, is on a year-over-year increase in home values, that they're up 2.3%. But when we dive into the data further, 57.3% of homes that were sold were under list price. And look at this 1 year chart for West Virginia. So what this tells me, maybe these price declines have now triggered investor activity. And I guess this is what concerns me, looking back at past data, looking back at the 2008 housing market crash, peaked in 2006. Over the time period of like 2008 to 2013, investors just jumped into the market. So I guess what we really need to pay attention to is when investors start buying real estate, we may start looking at areas a little bit differently, saying, what's going on there? Do investors feel that the home prices are getting to a point where they can start making money on them again? So let's take a look at the map of West Virginia. I don't know if you've ever driven through West Virginia, but there isn't a whole lot there. They are building data centers there, and I think Virginia has a lot of data centers already. West Virginia has plans for data centers, and I get it. These data centers take several years to build, and they employ a lot of people, but it's only temporary. I don't know what other industry is in West Virginia other than the casinos and maybe a cabin business or an Airbnb type of business. But you can see it's got a big reach, goes way up into Pennsylvania here, touches Ohio, Kentucky, Virginia. Let's see what Bright MLS says. This shows that since 22, definitely that was their peak. 2022, just about in all price categories, they peaked out, and they've been on a decline ever since. But really, look at the million plus. I mean, I can't even imagine what would be a million plus unless it was a huge parcel or somebody just retired there to some mountain home. But you can definitely see West Virginia, like the other regions that I showed you, are on major downward price trajectories. Well, there you have it. Thanks so much for watching. If you liked the video, you can hit the thumbs up button. It'll let me know that you did. And as always, you can share this video with your family and friends. See you next time. Sachs Realty, Maryland broker number 607720, office number 443-318-4514, equal housing opportunity.